Welcome to our quarterly webcast, a short video taping offering you the chance to get acquainted with some of the insights of our investment professionals. Siu Kee, welcome. Little Birdie told me that you guys seem to have reached the 1 billion mark with your patrimonial fund, but hopefully more on that later. We're now smack bam in the middle of summer, so it's a good place maybe to review the past 6 months.
Yeah, so the first 6 months were very eventful. We had fantastic performance in absolute and relative return basis. But let me break it down for you in 2 separate quarters.
Please.
And it was a story of actually 2 different quarters, where the first quarter, historic event of the European Central Bank starting its quantitative easing program, sending up equity markets dramatically, bond markets up as well. For an investor, that's a perfect environment to take an aggressive stance. In the second quarter was a bit more challenging. We had bond yields on a super low level, bottomed in April at 5 basis points. It has shot up dramatically since then. So for bond returns, it was quite bad, and it also sent some doubts into equity markets as well. So with markets a bit more doubtful, with the Greek stress coming in, we took a bit of a step back as well.
That sounds a bit like a roller coaster ride, because I hear you say something about reduced risk, but also about improved growth dynamics. How does that impact your positioning and your fund in the end?
Yes, yeah. Well, our base case is for global growth to pick up in the second half of this year. We like to be overweight in equities. We like to be somewhat cautious on the bond side. But our base case is that we would like to have a risk-on stance. However, there's a few things going on in the world. We have got the Greek stress, we've got a Chinese slowdown, we've got a US rate hike coming up. All events of which we are mindful of. And our base case is to have a risk-on stance and be mindful of these events and adjust our positioning to those events.
So let's put those events on the side. Tell us something about this media bonanza that seems to be happening in the media on mixed funds. What's driving this phenomenon?
Yeah, well, it's
huge.
It's solid appetite for mixed funds, and it's good for us. With a super low savings rate for investors. Yeah, investors are looking for alternatives to enter the financial markets. The question is how. And then with mixed funds, you have a perfect vehicle, an easy way to access financial markets. And with the patrimonial funds, and you already mentioned it, we surpassed the 1 billion mark over the last quarter. It's a huge milestone for us, and we're very happy with that. But it proves to us that there's solid appetite for mixed funds, and hopefully with some of these stressful events clearing over the next few months, the appetite will also be strong going forward as well.
Congratulations on your mark. And if you would like to find out more about our strategy, look us up at nnip.com.